Alright guys, this is Abe Forex here again today. Today is 25th of June 2026. Today I'll be sharing my thoughts about the market, stocks, commodities, cryptocurrency, currencies and indices. And so I'll be starting with dollar. Now, when you look at my screen closely, you would notice that dollar has been in a nasty range for quite a number of years, and that is because there has been interest rate cuts over the years by the previous Fed chair. But the new Fed chair is kind of hawkish, meaning that it kind of didn't increase the interest rate. The interest rate remains the same, and there is inflation. People are expecting that it's going to kind of cut rate, but it didn't do that. So the rate remains at 3.75%. And that in its own gave gold, because from the onset we notice that dollar is a safe haven currency. Also, people run to gold in place of dollar because gold is a safe haven asset when there is kind of issue when it comes to the economy, or probably there is inflation. People run to gold as a safe haven asset, and also dollar is a safe haven currency. Now you will notice that on my screen that dollar has been in a nasty range for a number of years because of the rate cuts that has happened previously, and now there is a breakout from this nasty range, this resistance, to show us that dollar is more attractive unlike gold. And both of them are always inverse in relationship. Whenever dollar is going up, gold has to be going down. And I want to reiterate this: whenever the dollar is trending, every other asset are trending. Every other asset, be it the cryptocurrency, be it the stock indices, be it the stock market, be it the bond market. Whenever dollar is trending, every other asset or currencies will trend, because dollar is like a benchmark globally, and it's also the global reserve currency. So it does has an inverse relationship with gold. Because they are both safe haven, there's one is currency, the other one is a hard asset, which is in form of metals, precious metals, also silver too. And it serves two purposes. It serves when you look at gold generally, gold serves the purpose of people holding it for longer term or longer period because of its genuinity, and because of that it has an inverse relationship. Whenever gold is trending to the upside, dollar is going to go to the downside. It has always been like that for years. So, and whenever dollar is trending to the upside, gold has to go down, and that is the reason why gold is going down for some times now. Gold gave us a kind of upside move for in 2026. When you look at it, gave us quite gave us 65% move to the upside, or 60% move to the upside, and immediately the war started. There was shock in oil supply and from the Middle East, and majority of all those countries that have amassed a lot of gold due to the fact that they want to de-dollarize. They don't want to have this over reliance on dollar. So they begin to sell some of their goods because they want to meet some of their contingencies in their countries, because oil, being one of their major revenue sources, is being taunted by the closure of the Strait of Hormuz, and that in its own made gold to sell off. And now that there's a kind of ceasefire, and there's kind of agreement between the Iran government, the USA and the Israeli government, that there's going to be a ceasefire. Now, oil has been a kind of inverse relationship to gold for quite some months, but now the reverse is the case. Now it's now inflation, and now dollar. Now looking at this, then the market has dropped down 25% when the war started, and now when dollar is strengthening as against the gold. So now the market is down 25%, erasing all the gains that we had from the beginning of the year. So it's not a coincidence. This is strategic. That being said, same thing. Let's look at silver. Silver is following the same procedures and same step as the same as gold, because both serve as a global reserve currency, and also serves as silver serves as an industrial mechanism, because people use silver to produce chips and the rest. So that is one of the reasons why you find out that silver too is coming down, because they are both precious metals. Now moving forward, we go to oil. Now that the Strait of Hormuz is kind of open, because there's an agreement between the Iran government and the Israeli Iran government and the American government, that there's going to be a ceasefire. You would find out that the oil now is dropping, because the rise in price of oil has actually caused inflation all over the global economy, and that in its own is causing an energy shock all over the places. But now the reverse is the case, because everything is coming down. Now oil is coming down. When the war started, oil was $67 per barrel, but now it's in when the war started, it went straight to $119 per barrel, which make inflation happen. But now it has dropped down to I think 65 or whatever, $68 per barrel. But that in its own does not mean that everything will start pumping because of the because of the lower in price of oil. It will take time before the supply is going to get to everywhere, before we kind of see the reduction in prices or kind of inflation going down. So it might take like some weeks or months before everything circulates. So moving forward, I will talk about the stock market, starting from the indices, which is the S&P 500, which is the benchmark for every stocks in America, top 500 companies in America, largest company. You will find out that when the war started, there was a reduction. The market had some losses, but 9 straight weeks there was a gain in the market, and at the same time now we are having a kind of retracement due to the inflation and the interest rate not being cut or not being increased. It was remaining the same. So you find out that the interest rate is having a kind of pullback. Normally the S&P 500 has rallied up to the top for 9 weeks, so it's time for it to give us a kind of retracement for others to be able to go into the market. So it's normal for it to react or to kind of retrace back down to this trend line, or probably to this previous highs, before another bull run to the upside. So same thing, S&P 500. And one of the reasons why the S&P 500, the inflation story didn't actually hit the S&P 500, probably the war issue, like the Israel and the Iran war, didn't affect the stock market, is because of this AI boom and the quarterly earnings that happened. So investors are happy, they are optimistic about this AI boom of a thing. So that didn't really have an effect on the stock market. Same thing applied to the Nasdaq, which is the top 100 tech company in America. The largest tech company in America has the same thing, same story. When the war started, there was a dip, and when there was quarterly earnings and the AI boom, data centers build out, hyperscalers, the mega cap, investing is so much in investing so much in the AI. So there was a kind of regain, and actually new high was created. So same thing as the Dow Jones, which is the top 30 companies in US Wall Street. Same thing happened. So these are the 3 top American indices that I would like to talk about. The Russell 2000, I don't really talk about that, but probably in some episodes I'm going to talk about that. That's the first 2000 largest 2000 companies in America. So I haven't talked about the stock indices. I don't want to talk about the stocks individually, because I want to talk about the performance of the stock market generally. So that's why I was able to pick the indices, So going into currencies, let's start with the USD JPY. Japan, being one of the top customers of the US bonds, usually defend this 160. Whenever it comes to all this psychological level, they try to defend it, because their currency is being devalued as against the US dollar. And what they did was, to always defend it all the time. You'll notice that whenever it gets to this point, they'll defend their currency, probably, do kind of, some global stops, and they'll sell it. People will sell it off. It has happened on several occasions. But because they themselves have increased interest rates, and gone are the days when they defend the not that they are not defending the currency, but gone are the days where they put money to, and their debt is increasing too. So they've defended this several times, but now they've increased interest rates, and that is why you notice that the USD JPY has passed through this $160 mark, $160 per yen mark. Now it's now 161 point something, whatever. So it has gone past that level. So that is for the USD JPY. Then for the GBP USD, that's the Great Britain dollar. You'll notice that I want to tell you that, and for every trader, whenever the dollar is strong, any USD currency that is by the quote side must sell. It's just a secret, and I'm not sure people usually say this to people. Every USD currency by the quote must sell. Now the dollar is trending. When you talk about AUD USD, GBP USD, Euro USD, BTC USD, anything that is USD pairs must sell. But if it is on the base side, it must buy. An example of it is USD JPY, USD CHF, USD CAD. It must buy because the dollar is strong as against any other currency. It's just a secret. You can hold that or take that to the market if you know what you're doing. But put your technical analysis into play, and also risk management. So you can always. I'm just telling you the direction of the market. So once you do your technical analysis from the 4 hours time frame, top down analysis, you can know when to enter or when to exit the market. So that being said, we go to yield. And why is dollar trending to the upside? Why is it buying? Why is it giving us a bull run? It's not far-fetched from the 2-year yield. You understand? Because increase in interest rate not changing the interest rate is kind of high. People are expecting it to be cut. It remains the same. You look at this 2-year yield, you notice that whenever the dollar is strong, the yield will be strong. People are buying more government bonds, US government bonds, and whenever the bonds is going down, the US government bond is going down, the yield will be rising. So you notice that the yield has been rising for quite a number of. Let me go to my monthly time frame so I can see that clearly. For straight 1, 2, 3, 4 for 4 months, the US yield has been increasing in value. That in its own is making the US bond to sell. Is making the US bond to sell, because they are having a kind of inverse relationship. If you look at this US bond, you will notice that it has more room to sell down to this point. That's $81. Once it reduces in prices up to this point, automatically the US bond yield is going to increase up to this point too. So that means that the more dollar is going up higher, the more the yield is going up higher. And once the yield is going up higher, the bond prices are reducing. You understand? It's as simple as ABC. And as the US dollar is increasing in value, every other currency and every other pairs will trend. Now, if we have a breakout from this point, then that means that we have the dollar now is going to be $114. Dollar is attractive for people now. So we are expecting a breakout from this place because of the momentum, and the Federal Reserve not reducing the rates, so dollar has a room to grow more up to this point, and a breakout is expected from this point. So that is what I feel, and that is my thoughts about the market. If you have any question, do well to reach out to me on WhatsApp, or probably just send me a DM, or just comment under this post. Let me just quickly run through BTC USD2. So the same thing applicable when there's inflation, when the dollar is strong, you find out that the BTC is going to lose a kind of value. Though BTC has been coming down for a very long time, but the major catalyst now that the US dollar is attractive, then every other asset is not going to be much more attractive. That's why you find out there's a sell-off in the majority of all those assets. So I'm going to be seeing you guys in another episode. Yeah, take it easy and see you guys later. Bye.